Can we talk about your credit? What's up, family? It's your girl Rory from VinHer, and as always, I'm here to bring you all business and credit tips that I wish I knew prior to scaling my business. As always, I want you all to stay tuned for this next video where I'm going to show you exactly how you can build your business credit even with a bad personal credit score. Let's get into it. So if you're here right now, you probably want the cheat code on how to get business credit even with a bad personal credit score. And listen, I get it. Listen, a lot of folks have bad personal credit. You would be surprised at how many people have bad credit. So I don't want you to feel bad if you in fact have bad credit, because the one thing about credit that most people don't know is that no matter how bad your credit profile is, it can get fixed. But before we jump into that, before we jump into how you can build the business credit, I want to really focus on the education behind what credit is, the credit ranges, the credit bureaus, things that you need to know in order to actually build business credit. All of these things matter. Let's go. So when it comes to credit, a lot of people misunderstand. They either overestimate or underestimate their actual credit scores. And so when it comes to credit, there's a bunch of different credit models and credit ranges when it comes to actually understanding your credit score. Most people know what's known as the FICO score or the Vantage score. And these are two different credit scoring models. We're specifically in this video going to talk about the FICO model because the FICO model is what most lenders use in order to approve you for credit. When it comes to this FICO credit score, it ranges from a 300 to an 850, with 300 being the lowest and 850 being the highest. Now, if you're like me, I always question why people want to strive for a perfect credit score, especially people who do not leverage their credit. Why are you so infatuated with having a perfect credit score? That's neither here nor there. But what I will say is that when it comes to this credit score is very, very important. But what's also equally important is your credit profile. Now, the way I like to describe this is think about your school, your GPA. Think about your GPA. What makes up your GPA, right? The classes that you take. Your GPA can be connected to what we call your credit score. So let's use this analogy. Your GPA is like your credit score, right? And your classes that you take and what scores, what grades you get in those classes is like your credit profile. So depending on the 5 factors that actually make up your credit profile, or what we're using in this analogy, the classes that you take, that dictates what type of GPA, what type of credit score that you will have in order to get approved by the lenders. So the 5 factors that they're looking at in order to approve you are firstly your payment history, right? Your payment history is extremely important. They don't want to choose people who can't pay their bills on time. This is extremely important. They also look at your credit utilization, right? How much of your credit are you using that they've extended to you? They're also looking into your credit age, right? How long have you had credit? They want someone with mature credit. They're also looking at your new accounts. They want folks who have not applied for credit like 60 years ago and are now asking for new accounts. They want someone who is actively always getting new lines, right? Within a reasonable amount of time. And then obviously, lastly, you have your credit mix, which is your mix between installment accounts and your mix between installment accounts and your revolving accounts. Now, having that strong credit profile is going to put you in a much better place than someone who doesn't have a strong credit profile, right? But in the event that you don't, right, that's what we're going to focus on here, is having a strong business profile. This is important along with that personal credit. But let's say that you don't have the best personal credit, right? That business credit or that business profile is going to matter that much more. So when it comes to that business profile, you obviously want to have a non-risky business, right? Because lenders don't want to lend money to a business that they consider risky, like real estate, like credit repair, like anything like trucking, anything that can be considered dangerous, or they might take a risk or a gamble with their money. You also want to make sure that you have a business phone number, right? You can check Freedom Voice. You also want to look into having a domain for your website and a domain for your email, right? You also want to make sure that you have your LLC set up appropriately. Looking into sole proprietors and DBAs, that those are not going to get you the most optimal amount of funding when it comes to going to go get this business credit. And obviously you want to make sure you get your EIN, which is a federal number, right? So you need to go to the irs.gov in order to get that. All of those things are taken into account when it comes to you getting your business approved for funding. So you must make sure, especially if you have bad credit, you must make sure that you have that put together, because this is what they're going to be leaning on a lot if you are not personally using your securities, your personal credit, in order to get your business credit approved, okay? Now that we've discussed a little bit of information about your credit profile being strong as well as your business profile, let's talk about the types of business credit, okay? When it comes to business credit, you have business credit that is personally guaranteed, you have business credit that is non-personally guaranteed, and then you have fintech business credit. When it comes to business credit that is personally guaranteed, this means that you are using your personal securities, you are using your personal credit profile in order to guarantee your business, right? In order to get your business credit approved, and also in order to take liability in the event that your business defaults on any of its payments. That's what it means to personally guarantee something, right? You're guaranteeing that you're going to pay the debts if your business defaults. Now, when it comes to your EIN only business credit, right? This is your non-PG business credit, which means that you are not personally guaranteeing it using your personal securities. Now, I'm going to speak about this later on in this video, but it does not mean that if you non-PG something that you do not get a hard inquiry for, or they will not ask you for your social security numbers, because that could still happen. But essentially, they're using the strength of the business specifically and your EIN in order to approve you, right? Lastly, you have fintech business credit, which operates a lot like non-PG or EIN only business credit, where they're using the strength of your business bank accounts as well as the strength of your business in order to approve you for different types of business. Now, keep in mind, what I just mentioned is not exhaustive as far as what types of business funding that you can get. A lot of times people think that it's only business credit, but from the different types of business funding that I just mentioned, you have all types of different business funding that you can get, including business credit, business lines of credit, startup loans, equipment loans. I mean, there's so many different products that you can get. I don't want you to feel pigeonholed or feel stuck when it comes to obtaining business funding because you're only looking at business credit. In the event that your business defaults, you will still have responsibility, even if you didn't get a hard inquiry for it, right? So be mindful of hard inquiries versus soft inquiries. Just because you did or did not get a hard pull does not, or it might mean that you still have to personally guarantee that debt. So I want to make sure you really got that drilled into your mind as we jump into this next section about different types of business credit that you can get without having a personal great credit score. There are two types of business credit that I want to emphasize in this video that you can get approved for even if you don't have a great personal credit score. And if you ask me, okay, Robbie, what is a personal great credit score, a great personal credit score? I would say anything over, right, 750. But you can get approval starting at a 680 when you're PGing business credit. But if you have anything under a 680, I highly encourage you, first of all, to get your credit fixed. This video is to find alternatives if you don't have your credit fixed right now, but I would stop and go focus on that while building up your EIN only or non-PG business credit, which we're going to get into, because having the combination of all three of these things will make you a beast when it comes to getting funding for your business, okay? So anything under a 680, go and get those things fixed, because it's going to put you in a great place to go get funding wherever you want. So let's get into it. I want to talk about two types of business credit, and that's EIN only business credit, which we know is non-PG, and then fintech business credit. Both of these types of business credit or business funding will allow you to get approved even if you do not have a personal credit score that is well above 750 or 700 or even a 680. They will still approve you. Even under that number, they will still approve you, but you have to meet the criteria that they need in order to approve you. And the biggest thing that people do not have right, which is why they're getting disapproved, is that perfect credit profile. The two types of business funding I want to jump into is fintech business credit and EIN only business credit. Now, I want to emphasize, when it comes to EIN only business credit, or what we know as non-PG, your business profile matters. It matters, y'all. It matters. It is a big deal because that is what they are holding you liable to. When you are not PGing something, they're using the strength of your business in order to approve you. So that has to be A1 in order for them to feel comfortable to lend money or extend credit to you, okay? So keep that in mind. Everything that we discussed in the beginning pieces of this video is extremely important as it pertains to you going ahead and getting funding from these EIN only accounts. So when it comes to EIN only business credit, you have different tiers that you have to work up, and then you have a payment term that you have to pay whatever debt that you spent within a certain amount of time. So they typically give you, for tier 1 accounts, between 10 to 30 days to pay off that debt, sometimes 7 days depending on the different card that you have. But essentially, whatever money, whatever debt you've accumulated over that billing period, you have to pay that off within their terms, okay? And so that's something that's a distinguishment to make between PG and non-PG business credit. When I have my Amex Platinum card, I can pay that over time, right? With interest. With these non-PG business credit cards, they want you to pay it within their terms. But the great thing is that you typically don't accumulate interest. Why? Because you're paying it off in full. And so with tier 1, you want to check out accounts like Quill, like Granger, like Uline, those different CEO Creative. There's a bunch of different companies at tier 1 that you can start building your business credit with, who will allow you to get in with as little as $100 on making a purchase order with them and paying back that $100 over a month, right? And doing that consecutively for 2 or 3 months to generate what we know as your business credit score, which is your paydex score. Now, the thing about EIN only business credit is that you can really only use it with those vendors. So for example, I have a Shell business credit card, a fleet card, but I can only use that card at Shell and at Jiffy Lube. My non-PG cards, wherever they take Visa, my PG cards, wherever they take Visa or Amex, I can spend those cards there, right? No issues. It's not the same with EIN only business credit until you work your way up to those higher tiers, okay? So it's extremely important that you build up at least 6 trade lines before you move from tier 1 to tier 2. You go from tier 1, which is your vendor accounts, to tier 2, which focuses on your retail accounts like Sam's Club, Dale, Floor & Decor, places like that. Now that's really how you build that EIN only business credit. Once you build past tier 2, you can start getting your fleet cards, you can start getting auto loans. But again, you can't skip the process. You have to work up those tiers in order to build that business credit. So that's what takes the process a little bit longer to get this business credit. But the thing that's important here is that they're really only doing soft pulls or no pulls to your credit at all, which allows you to build business credit even if you have bad personal credit. Now, the next type of business credit that we're going to talk about is called fintech business credit. Now, this is pretty much the future of finance right now. If any of y'all are tapped into Wall Street Trapper, y'all know he is super gung-ho about fintech, just the technology sector in general. But this is what people might perceive as the more radical form of where finance is going. And so the actual term for fintech is financial technology. So these financial technology companies are partnering with these different banks and lenders who can get people approved in non-traditional ways of getting approved, right? Typically, when you go to a bank, they want you to PG, they want to see a healthy business, they want to see a lot of different things in order for them to extend you any type of credit, any type of line of credit. With these fintech companies, though, they're basing your approvals based on the strength and the liquidity of your business bank accounts, right? Some of them are even looking into your personal accounts in order to get you approved. Now, with that being said, right, they are partnering with technology companies like Plaid, for example, who can validate what you actually have in your account. So they want to see, over $10,000 or so, $5,000, $25,000. They want to see large amounts of money that have been able to season in your account over time. These lenders want to see that you have that 10, 15, 20K up in your account for over 3 months so that they can feel more comfortable lending you the money, because their terms are a lot like EIN only business credit, right? Where they're using net terms where you have to pay back anything that you spent out over between 7 and 30 days. Some of them are now creating reward systems. At first, when they first started this, there weren't even any rewards. They weren't giving you flight points and cash back rewards. It was literally just there extending you this credit based on you literally just having liquidity, right? And so now they have these net terms, just like the EIN only business credit. So based on the money that you have in your accounts, you can get approved for this EIN only or non-PG financial tech credit, financial tech lines of credit, financial tech loans. All of these things you can qualify even if you don't have a great personal credit score. I'm telling y'all, this ain't no cap, this is real life. Now, I want you to keep in mind that just because I said that they may or may not PG you does not mean that they won't pull your credit, right? They might ask you for your security still to do a soft credit pull on you. This is not atypical for these companies to still check your credit, because if they really feel that you're a risk to them because your credit is not good at all, even if you have strong liquidity, they still won't approve you. I've seen this happen time and time again. So that's why I still recommend that you be working on that personal credit simultaneously while building that EIN or non-PG business credit. Now, I know some of y'all are sitting here saying, Rory, wait a minute. I don't got $10,000 that I can let sit into my account for 3, 4, 5, 6, 7 months. I get that 100%. When it comes to having the liquidity, this is something that you have to build up over time. This is also why I recommend that you get your personal credit fixed so that you can start leveraging using your money, okay? So this is a quick little hack that I personally recommend. When you get credit established and you start getting these higher limits, you can learn different things to liquidate your credit and move your money around to your different accounts so that money can season there over time. And so when you go to apply to go get business funding, because you have this money sitting in these accounts, it can validate you being able to actually be a less than risky candidate to go and get business funding from them. So that's why, again, we got to take baby steps to get to where we are, but it's extremely important that you understand different tools, hacks, different ways that you can essentially make things work, even if it cannot work in a traditional sense. So I want to really just dive into and really nail in on why I really, really love business credit way more than personal credit. It's so many reasons, y'all. But most importantly, it's the fact that depending on the lender, it does not get reported to you personally. Depending on the lender, they do not report what you do on that business side unless you default. This is key, you all, because you spend a lot of money in your business more than likely, or you plan to. Let's use an example here. If you had, all right, use one of my credit cards. Let's just say this is a business credit card. You had a business credit card, right? It was $10,000 on it. And you maxed out that $10,000 because that's a normal type of spend, right? Your credit scores, TransUnion, Equifax, Experian, they're not gonna know nothing unless you don't make those monthly payments on time, right? If you PG'd it. However, if you have that same $10,000 limit on a card, right? And you spend $10,000 personally, you might as well blow your credit score away because it's a wrap, right? Until you pay that utilization back. So this is why I personally love business credit, because it does not tend to affect you in the same ways, right, that personal credit does. And when it comes to the two different types, right, business credit, they are more likely to approve you for higher limits. When it comes to personal credit, they are going to be sticklers on how you are spending. They're going to pay close attention to your spending habits. And I don't like that, because this is my credit. But at the end of the day, they control everything. And so both personal credit and business credit, they're looking at your spending habits. But at the end of the day, it's not atypical for you to spend $10,000 in a business. It is atypical to see you spend $10,000 personally, and it causes a lot of red flags, and for them to be looking at you a little bit more closely to see what you have going on in your personal life and if they want to continue that relationship with you. I say all of that to say the same stands for non-PG or EIN only business credit. They are expecting you to use these lines. They do not report personally, obviously, because you're not PGing it, right? You are using, right, the strength of your business credit, the strength of your business profile, the strength of your liquidity that you have in your accounts in order to get approved for these things. Some of them are PG, most of them are not. So that's why it's extremely important, you all, that you understand the significant differences between personal credit and business credit, and then the variations that they have within this business credit, business funding space. I'm telling y'all right now, it's a game changer that's happening right now. And we especially in our community, want to get ahead of the curve when it comes to getting access to these different types of financial sectors that are essentially making a way for us to be able to get credit no matter what our situation is. Now, the last thing I want to put y'all on before I get up out of here, because I got things to do, is I want to drop some different places that you all can go look to go get some funding, as well as some resources that can help you as far as getting funding for your business. So let's get into it. When it comes to looking at these large banks, a lot of people love these large banks like Bank of America, Chase, Wells Fargo, Discover. We love those banks because they have the wonderful perks. They have the hotel perks, they have the flight points, they have the cashback rewards. That's cool and dandy. But when you have bad personal credit and you're trying to build your way up out of that, I would not suggest that you go to those lenders, because even people with good credit get disapproved from them, right? Even people with great credit get disapproved by them because they have a more stickler way of how they assess who they're going to extend lines of credit to. So I recommend a couple of these different companies for you to look into, for you to go get funding for your business. And that includes Fundbox, Cabbage with a K, Square, PayPal, Clear. Those are a bunch of different fintech companies and lenders in general who will allow you to get lines of credit, business credit cards, startup loans, and they will again use the strength of the transactions that they see between your business bank accounts, the transactions that they see in your business to get you approved for these lines of credit or these business credit cards, okay? Now, as far as EIN only business credit, building up those different tiers, I actually have a guide with 85 plus vendors that you can get access to. What I'm gonna do is I'm gonna drop the link below, and in this guide, it explains exactly what you need from the lender to their phone number, their website. It shows you where they report to. It shows you everything you need to build up the different tiers in EIN only business credit, right? So again, this is to build your business credit, even if you do not want to PG it, or if you don't have the personal credit to PG, you will want to build up these different tiers so you can get access to the business cards, business loans, fleet cards, get access to all types of business credit without even using your personal securities. This is extremely important. Now, what I also have for you that will be super, super helpful is I have a funding matrix guide. And in this guide, it allows you to document your entire process for when you're going to go get funding, so you know exactly what was lent to you, exactly what data points that you hit, exactly what you needed your profile to look like in order to get approved for whatever accounts that you got approved for. Now, this is extremely important because a lot of times people forget what data points they enter. People sometimes don't even document that process, so they don't even know where they are in the process of building their personal or business credit. And so what I'm going to do is I'm going to drop that link in the description for you as well. But both of these things are going to help you tremendously as it pertains to you building that business credit and tracking your data points. So all you have to do at this point, listen to me now, all you got to do is duplicate the process. And so I want to make this as easy as possible for you to learn how to duplicate the process, which is why I made these sample guides for you to use. All you got to do is run the play. Listen, family, all in all, when it comes to this business credit ish, it is really not difficult to build business credit. It is going to be a lot easier if you have that personal credit fixed. I'm telling y'all that right now. I definitely didn't hold that back. You got a lot of people who will sit here and tell you, yeah, just keep building. You can have bad credit. I'm telling y'all, that's going to be a roadblock somewhere in your journey. Even if not now, it might be a roadblock in the journey moving forward. So I want you to make sure while you are building up this EIN and non-PG business credit, that you're also getting your personal credit established in such a way that you can attack it from any way you want to. I want y'all to be beasts when it comes to this business credit, because when you have good personal credit, it unlocks the doors for whatever you want. Doesn't matter if you're PG in it or not. Doesn't matter if it's a hard pull or soft pull. You won't have any worries when it comes to getting funding, because you have a strong business profile. You have a strong business credit profile. You are ready to go. You feel me? You feel me? And just like we started this video, can we talk about your credit? Because that's the core of allowing you to be able to do whatever it is that you want. Understand that credit is a tool, so never let it consume you in such a negative way that it impairs you, okay? Listen, family, I hope this video gave you some more context on how you can build your business credit even if you have a bad personal credit score. If this video helped to inspire you and educate you in any more ways, please do me a favor. Put that thing down, flip it, and reverse it. Go ahead and hit that like button, family. Share this out to 5 people in your family or your friend group who could utilize this. As always, I'm Rari from Venher, and negritude always. I'm rooting for everybody Black. Let's go and build these businesses. Let's go and build this credit, y'all. I'll see y'all in the next video.